Hello, Maverick traders. This is Imri with Maverick Currencies, here with today's market roundup. Okay, so in today's market roundup, there is a lot to talk about, but I think most of the interesting news was actually on the equity side of the market. And I think the currencies are going to get a little bit more exciting in the short term. But today for me personally was more of a sit back and watch what they're going to do kind of day rather than more of an active trading one. So overall, great day for equities. You know, the S&P was up over 2%. The world stock index was up almost 2%. Cryptos were a mixed bag. Really, it was Bitcoin propping up the market, but a lot of the larger altcoins experienced pretty big slides. Gold practically flat on the day, and oil with a very bullish day up almost 3%. So the big news today was that the US GDP numbers came in and they were worse than expected, and yet the market rallied. I might be wrong here, but this is the first time that I've seen the market rally on bad news, which is in a long time, that is, which is really encouraging for bulls, but the market is definitely not out of trouble yet. So if we take a look at the chart, the price chart of the S&P 500 here, you'll see that we're kind of trading back into this resistance band that I've had highlighted on these price charts for quite some time here. And yeah, we've cleared the 20-period moving average, but we're right back in that resistance band. And until we clear that band convincingly and see a bullish moving average crossover to the upside, I think it's pretty tough to stay consistently long the market. So I think if you're trading around in equities, it's important to be nimble. It's important to keep an open mind, because I think we're going to see a few more up-down days, you know, a down day followed by an up day followed by a down day. I think we're going to see that kind of price action for a little while until we get clarity on whether or not this is simply a bear market rally or if the market's put in a convincing bottom. And it's a very similar story over in the total world stock index here. We've cleared that trend line, which I had highlighted on the charts last week. We cleared it really nicely, but we're about to be trading back into what was once broken support, which could now easily serve as resistance. So it's the same story as the S&P 500. I'd really want to see a few more days, quite a few more days of bullish trading in global equity markets, and then perhaps these moving averages will cross to the upside and a long-term bottom will be in. But until that happens, I think you have to respect the fact that we have made a series of lower lows and lower highs since pretty much the end of March here. And until we see that pattern broken, it's tough for me to take a very bullish view here on equities, a long-term bullish view, that is. So I do think we're getting closer and closer to carving out a bottom, but there is no definitive evidence as of yet to say that that bottom has been put in. And over in crypto world, we're just trading sideways. And a lot of this, like I said, is Bitcoin propping up this market. Bitcoin, although down as I'm recording this, is not, it's not down like 10%. But, Ethereum, Litecoin, they had some pretty rough days, both down between 5 and 6% there. So crypto's moving sideways, but I would not be surprised to see us break down. It's possible that we get a little pop of energy here and we trade between the 20 and 50 period moving averages, but I don't expect this bear market to be done just yet. So given the fact that we've cleared the 20 period moving average, given the fact that the slope of the 50 period moving average is starting to even out, I'm going to go and give this market a -1 for now. It's still got a lot of work to do before we turn positive, and it could easily be back at a -2 or a -3 in just a couple of days. So just keep a close eye on the short-term action here. I don't have much confidence in this market one way or the other, which is why I reiterate it's important to be very nimble in these kinds of conditions. Over here in the news department, tomorrow we've got we've got another inflation reading. This one's a little bit different from CPI. This one's also geared towards consumers, but it doesn't include food and energy. So it's going to be very interesting to see how this report comes out. It could definitely be a market mover, and it could definitely have an impact on both equities and the US dollar. I believe it's the personal consumption or expenditures index, something along those lines. So, inflation is definitely still, still in the news. It's going to continue to be in the news. And I think traders are going to be eager to see whether these news reports give any short-term bursts of volatility. PCE, I had a brief moment where I blanked out there, but it's the Personal Consumption Expenditures Index. So again, like I said, a little bit different from CPI. Market watches CPI as well, obviously, but anything inflation related at this time is going to get some eyeballs on it. So that'll be early tomorrow morning at 8:30 a.m. Eastern time. Now, going on into some currency analysis here. Like I said, the cryptos had a pretty rough day. Solana, wow, down almost 8%. Cardano down 6%. Litecoin down 6.5%. It was a rough day, and like I said, if it wasn't for Bitcoin, the overall sector would look a lot worse. And then over on the FX side, it was a relatively muted day. We had a day of relative outperformance for the euro and a day of relative underperformance in the US dollar and the Kiwi. But yeah, I personally did not really see any great trades to take today. I'm hoping that tomorrow we get a burst of trending energy that'll allow us to capture quite a few pips there. So like I said, it's just a rough day over in in cryptocurrency land. I don't see any reason to try and start catching what is still a falling knife. If equities have bottomed, it's possible they're leading the crypto market. But as of right now, I cannot recommend playing the long side in cryptocurrency, just due to the fact that we're in a pretty severe bear market still. And then over in fiat, like I said, it was really the euro, all about the euro and subsequently the Swiss franc today. The Canadian dollar also had a decent showing. That could easily be correlated with oil being up almost 3% on the day, of course. Now, when we get into velocity, I've got a lot of currencies here right straddling the zero line. Now, I don't mind that because when we're heading into tomorrow morning and it's a potentially high impact news event on the calendar, here's what I can tell you about volatility. Periods of high volatility lead to periods of low volatility. And the inverse is true as well. If you have a period of low volatility, it's going to naturally change into a period of higher volatility. So although volatility right now in currencies in the fiat side was pretty muted, there is definitely the possibility that could change very quickly in overnight trading or even in tomorrow's New York trading session. So I suspect that if I had to do this tomorrow all over again, these velocity scores could be a little bit different. So we will be taking a look at some potential currency trades here. There's really just one on my radar, and I'll show you what I see. I talked about it last week as well. And then we're going to take a look at some of the Maverick currency baskets as well. So join me for that right now. So we're going to be taking a look first at the one currency pair, which is catching my eye. Admittedly, not necessarily on a relative strength and weakness basis, but this price chart is really interesting to me. I mean, we've been trading inside this, inside what has proven to be stiff resistance since pretty much the beginning of May, just going sideways. If I pull up momentum indicators, we can see we do have some bearish divergences here, right? Here, I'm going to use a different color to highlight that. So we can see we have some bearish divergences here forming in the RSI, the relative strength index, and also in the MACD. So the momentum is suggesting to me that we might actually be breaking down out of this resistance range. On the other hand, if we clear it, that could definitely lead to some interesting setups to the upside in sterling Aussie. So just based purely on the technicals, if you showed me this price chart and I didn't know what it was, whether it was a currency or a commodity or a stock, I would say, yeah, this is worth paying attention to, because eventually this consolidation period is going to end and we're going to get either a breakout or a breakdown. I'm directionally agnostic, could not care less which way it goes. I just care that this kind of setup traditionally leads to a tradable move. Now moving on to currency baskets. So here I've got the dollar first, okay? Now we have that PCE report coming out tomorrow, and I'm keeping a close eye on this floor in the dollar, okay? So that support right there is looking pretty interesting to me. And it's looking pretty interesting in the sense that if we break that, we could get a sharp tradable move. The only concern I'd have is that we do have some support lingering a little bit below. So ideally in overnight trading, if we break below the support zone and the PCE report causes traders to be bearish the dollar, that could make for an excellent tradable setup there. On the other hand, we could also bounce from this support. So like I said, I'm directionally agnostic. If I wanted to play the long side in the dollar, I'd look for this trend line to be broken. Let's throw some moving averages on there. You see, the reason I want the trend line to be broken is because that means we could then break out past the 20 period moving average. So, the dollar's been correcting for sure. I think it's a little premature to say that a major top has been put in place in the dollar. We need a little bit more price evidence before we can come to that conclusion, but I'd be happy to see the dollar break down here because I do think the risk is starting to get skewed to the downside in the US dollar. And then over here we have the euro. So I've got a little trend line here showcasing short-term resistance. If we can break through that resistance, then I think we could have a great opportunity in the euro dollar currency pair. And you can see here I've got a support trend line in the euro as well. Now this is a basket, so in practical terms, if we break this trend line, that'll be a big move on the euro crosses for sure. But I'd be more inclined to look for continued upside in euro dollar, the actual currency pair. And I'd be wary of that trade, if the euro touches this trend line. So if we reach that trend line, I'd look at, and I was long the euro, I'd be looking to either take profits or manage the trade and reduce or eliminate any risk I might have. So again, not a lot to look at, heading into tomorrow. Keep an eye on sterling Aussie, and then keep an eye on the dollar and the euro baskets. So that's kind of what I have my attention on. I'm hoping tomorrow's a better trading day than today, hoping for some more activity, some more energy. And if there isn't that kind of energy, then the best thing to do is to simply sit back, carry on with your day, get ready for the next week, right? Not every day is a trading day and not every week is a trading week. So with that, let's go back to the presentation. So in conclusion, right, I think it's likely that we might see some more risk on in the short term. The euro, Swiss franc look pretty good. The US dollar looks a little bearish. And the Canadian dollar is definitely overextended right now. I think a lot of the move had to do with a bit of a shine rubbing off on the CAD from oil. So we'll have to see how the Canadian dollar hangs in. But if the dollar is weakening, then I would expect the Canadian dollar on a relative basis to weaken a little bit with it relative to perhaps to some of its other commodity currency peers. But we'll have to see for sure. And no change bearish on the cryptocurrencies. So that's it for me, everyone. Thanks for watching, and I'll see you next week.